Hey everyone, this is Ben from Cheddar Flow. I actually am in Cancun, Mexico right now. I'm on vacation this week. However, there's no such thing as a vacation from the stock market. I do intend to continue with these weekly recaps like I've promised every single Sunday, so I will continue that today. I just wanted to let you guys know kind of where I am right now, and I will be trading this week, especially in the Discord group. I'll kind of give you my thoughts going forward, so you can look forward to that. But in terms of the market this week, this pattern right here, and I simplified my chart from previous videos just to make sure you guys know that this is the main pattern we're trading within right now, at least in a midterm standpoint. This pattern right here, the downward wedge we're in, is very, very crucial, especially now because we're starting to see a slowdown of this kind of like momentum that we gained from lows right here. Now, do I believe we've topped out in terms of this move or this leg up? No, I don't believe that yet. However, we are getting close to the top of this downward wedge. You can see here, this green line is the support, this top green line is the resistance, and we are getting close to that resistance, roughly around 394, 395 on SPY. And this has acted as a resistance 1, 2, and 3 times so far during this leg. Although there is one thing to note, and the last time we actually had a double top over here, we didn't quite reach the top of this resistance and fell down and made new yearly lows off of this double top, which is interesting because right now we have made a double top on kind of where we are in the past like 2 weeks of the market. So does it have to happen where we made a double top here, we fall down to new yearly lows, we make a double top here and fall down to new yearly lows? No, it doesn't have to be like that. However, it is something to watch for, especially because we're starting to see signs of a slowdown with that momentum, like I said. One sign that I'm seeing that kind of hints at that slowdown is a lot of this put flow has been very continuous as we've kind of pumped up so far. We saw it back here before this downward move where we kind of consolidated and then broke out of. And then now we're starting to see it again these last 2 days, Thursday and Friday, where we're just seeing a ton of these puts over 1 million in premium hit the tape. Just very minimal calls. This one right here, for in terms of a call, is probably like one of the biggest ones. However, it's most likely a hedge because of the contract size. Typically when we see 5,000 contracts, 10,000 contract size orders, and et cetera for like 5,000 increments, they tend to be hedges. Just in our experience, we've seen that. So this would probably just be a hedge to the upside for the end of the year. But for the most part, most of these short-term bets within the July 15th expiration here, the August 19th expiration, and also September expiration are majority to the downside, overwhelming majority, honestly. You can see here 92% put flow to 8% call flow from just this past week, from July 4th to July 10th. So very, very bearish. And some of these prints like these right here, super, super bearish. 363 is the strike for these when we were at like 381. So very far out of the money, along with a lot of premium with it. So something to note there. Also, another key thing to note is in our dark pool levels feature right here, we're starting to see signs of a lot of shares hit the dark pool again, which is not something we saw near the lows, or at least the yearly lows on this chart. So very interesting that they were not accumulating, at least institutions that have access to the dark pools, they were not accumulating shares near the lows like on June 16th to 17th, even along the lines of all of these days. But now we're starting to see some more activity in the dark pools, which leads me to believe that they're probably selling around these levels because they weren't really accumulating down here. Again, you could think of someone that had a lot of shares and they maybe didn't sell while we were up here, which by the way, we did see tons of sell orders along this entire corrective process. It's still very, very difficult to sell all of your shares when you have billions of them, and there's tons of firms out there that have access to these dark pools, so they maybe weren't able to sell all of them, and as we've fallen down, they're using these relief rallies that we're seeing here, kind of like back here and then over here during this big rally, to kind of get a sense of selling those shares that they had kind of as we go down along this right here. So they're using this relief rally to potentially sell into, because again, we are on low volume right now, not much volume to the upside, and you just need to be aware of that, especially as we go up. Now, does that mean we've made that topping process yet? No. Again, like I said, there's still potential that we can reach the top of this, or another potential is we have a fake breakout of this downward wedge. So think about it like a typical breakout, kind of like what we saw with Apple. I shared with you guys Apple last week before we broke out, and I said that I was bullish on this. So basically, we had the top of the trend line over here that you draw across, And right here, we had a major breakout for 3 days. However, is it still possible that we have a fake breakout? Yes, it is. I don't believe this will be the case, at least sometime soon. However, it's possible with these that you have a lot of bullish momentum breaking out of a key trend line when you break that trend line, and then it falls back, retests this level, but is unable to bounce off the retest, which is very, very bearish if you fall back into this channel. If a bullish breakout occurs on any ticker, you want it to continue upward, because if it's not able to hold the upside, that's even more bearish, because that means that there's no buyers along with that breakout. So that's just something to note going forward, and something you can use on SPY or any ticker for that matter, especially if we do have a fake breakout in the future on SPY. Something to note going forward for your own trading strategies. Another thing I do want to talk about here is the DXY. So the dollar has just been ripping lately. So you can see here on the daily chart, just continuous all the way since last year in 2021. But if we go to kind of a 15-minute time frame, so a bit shorter of a time frame, you could actually see that we're starting to see signs of a slowdown on the dollar. So if you have a pennant here, which you can see, and I posted this in the Discord group. By the way, it is free if you aren't in the Discord group yet. So you can join that with the link below. But you have a pennant here, and we had a breakout of the pennant, which is bullish. However, just like I shared with you on the Apple example and SPY example, you can see here we retested this pennant, and it actually fell back in, was not able to bounce after it fell back in, and it just continued to fall down. We actually retested it after it fell back down under, and it was not able to get back up above the retest. This is a very bearish chart in terms of the short-term time frame. So it is only on the 15-minute chart. However, these 15-minute moves and fake outs tend to be a big deal going forward, especially for longer time frames, because of this big bearish setup that we're seeing right here on the dollar. So because of this, because we had a big fake out, and now we have some more bearish emphasis on DXY, that can support the market going forward. Remember, when the dollar falls, then you actually have some more strength in the market. So just something to note going forward, like I said. And then also the VIX, I do want to talk about here. The VIX has seen signs of just falling, honestly, since we saw that big high up here with the double top all the way back in the end of June, kind of like June 14th, June 15th, so I guess mid-June. And we've just seen it fall since then, even with the market kind of falling along with it. Just volatility is not there right now. In terms of where we are at the moment, we're actually in a demand zone. So you can see here, this demand zone has had bounces in the past for the VIX previously, but as of now, we're in the middle of this demand zone, and it needs to hold if the market does want to sell off going forward. If we fall below this demand zone here, so roughly 23.68, that's the precise level, probably 23.5 is the level you kind of want to look at. But if we were to fall below and have a decisive close, at least on the daily, or 2 dailies is more ideal, below, then that is bearish for the VIX going forward, which in turn would be bullish for SPY because volatility is falling here. So just some things to note going forward, like I said. As of now, again, we have some more upside potentially for SPY to test this resistance up here. But like I said, along with that, we are seeing signs of a slowdown upward. Again, it doesn't have to be the top, but these are things to note as we go up, because when we start to see these warning signs of a slowdown, it tends to not be the end, but we know that we're getting close to that end point. We can take a potential short position, which I will be doing eventually once my targets are hit on that. So one more thing I did want to talk about was Google's flow on Friday. This was actually very, very bullish, and we have the stock split for Google on Friday of this week, so July 15th. That is something you do want to note. Also, by the way, we do have CPI data this week, which characteristically has been bearish for the market. It doesn't have to happen within the day, at least, that we fall. However, it does end up having an emphasis in the days following, which can bring weakness to the market. So just something to note. That is the middle of this week. And in terms of Google, though, for the individual ticker, we've seen a lot of bullish prints on this, at least on Friday. We have a $5.4 million. This is in the money print. However, it's still a lot of premium, along with all these other orders that have a lot of premium with it. So it is something to note, especially with that stock split coming up. Could be a run up going into it. So something to note there. The chart looks pretty good as well. And one thing along with this chart is we actually saw someone snipe 0 data expiration contracts early in the morning for 1.9 million worth of premium. They got the contracts at the spot price of 2,342. If you actually go to Google here, you can see that that was the low of day. 2,342 is right here on the low of day. They bought those contracts. They actually bought it in the retest during this 15-minute candle. So they got the low of this 15-minute candle and it ripped straight off of that. So that was a very, very large play with a lot of premium along with it. So these are the type of day trading orders I like to see during the day. I didn't personally catch this one, but there were some people that did, and this is just an ideal setup right here when you see that much premium along with this little of expiration in terms of time along with it. That's very bullish there. So other than that though, I do hope you guys enjoyed the video, and I'm going to enjoy myself in Cancun this week. But like I said, I will be in the Discord to continue talking to you guys this week. I'll just be on the beach. That's the only difference. And I'll see you guys in the midweek video that we have later on Wednesday.